As the Union Budget 2026 draws closer, policy conversations are gaining momentum and expectations across the economy are beginning to crystallize. In our previous episode of PolicyCast, we took a deep dive into direct tax expectations and the role they could play in shaping India's fiscal and growth priorities. In this episode, we shift focus to indirect taxation. Much of this progress has been anchored in the 56th GST Council meeting outcomes and the steady transition towards GST 2.0, which has now entered a phase of maturity. While GST policy decisions are formally steered by the GST Council, the Union Budget continues to play a critical role in setting the broader policy direction. To unpack what Budget 2026 could mean for Indian businesses in this evolving indirect tax landscape, we are joined by Mr. Manoj Mishra, who will share his perspectives on key expectations. So let us begin. Manoj, indirect tax collections often signal more than just revenue outcomes. How should policymakers and markets read the recent collection data, and what relevance does it hold in framing the union budget?
Thanks. It's a really good question, Simran. So, to begin with, indirect taxes is no more just revenue for the government. Its collection act as a real-time economic indicator. They reflect not just revenue strength, but also consumption patterns, supply chain activities, trade dynamics, and effectiveness of compliance framework. If we look into the data, it suggests that revenue stability is increasingly linked to sustaining domestic demand rather than aggressive rate-led taxation. So, like I will give you some example if data point has any kind of indication. So, we had GST 2.0 somewhere in November, and after that, December, November being festive season, collections were high. But even in December, if we look at the collections were around 1.75 lakh crore, which is like 6.1% higher than whatever we used to do it earlier. If we compare it with the collections we had from April to December, which was around 8.6%, it is on the lower side. But we can say that because of relaxation and duty structuring, GST structuring in 2.0, the collections have come out, but it definitely indicates that consumption has gone up. And that reflects from the economic point of view when we say that we are trying to achieve GDP growth of around 8%. So you can see that everything is linked now. So, indirect tax has become a barometer for revenue growth or economic activities in the country. At the same time, since there is a boost to Make in India, that is reflecting in lower collection for customs. You would have seen that custom collections has moderated and directly linked to more value addition and more manufacturing activities within India rather than importing it from outside India. Excise duty collections have gone up by 9%, and that would generally lead to, I think, increased consumption on the items outside GST, and also because of some consumptions increase. That is one, and we may see further increase post introduction of excise on tobacco, pan masala, cigarettes, etc., where rate has been increased exponentially. So, if we talk like everything together, taken together, we will see that GST has firmly emerged as a backbone for indirect taxes. Customs is stabilized or going down, and excise is something which we'll have to look up for certain period of time.
Thank you. With GST 2.0 already setting the direction, what more needs to be done to reform the indirect tax regime, and what should businesses realistically expect from the upcoming union budget?
So, indirect tax reform has now moved beyond expansion and information to efficiency and refinement. That has, I think, that we have done. So GST 2.0, like a lot of calibration has already been done. The next phase must focus on eliminating friction within the framework, especially around input tax credit, delayed refund, blocked credits, and frequent reversal continue to strain business cash flow, turning GST into a cost rather than a pass through, because it is a value added tax, so it should be only pass through, and actual burden should be at consumer level. But if there is a burning of input tax credit, then cost will be to the manufacturer or the or within the supply chain, rather being passed on to the consumer as tax. So that is one. So the priority now should be to ensure that legitimate credit flow seamlessly, and refunds, particularly for MSMEs, are automated, time bound, and predictable. Equally important would be to tighter alignment between customs and GST. So tax policy does not distort supply chain or create persistent credit accumulation. From budget 2026, businesses are not expecting disruptive changes. I think, in my opinion, the ask is the policy stability, fewer interpretation disputes, and deeper technology integration.
Thank you. If this budget is to send a meaningful signal to industry, what GST reforms would matter most in terms of correcting structural inefficiencies and supporting long-term growth?
So, Simran, there are 2 points. One, that what is going to be there in the budget, and second, what is our wish list. So, like, to some extent, we know that what they are going to do in the budget, because all major GST related amendments has to pass through GST Council. So, and they cannot pick up any policy related decision directly in the budget before discussing it with the GST Council. However, if you ask me my wish list, I would say that the first thing they should do to include petroleum products under GST. Bringing fuels into GST framework would significantly improve input tax credit and reduce cascading effects. Further, if we talk about revenue under inverted duty structure, this serious friction point, particularly for MSMEs and manufacturers. While the law permits refund of accumulated credit on inputs, the continued exclusion of input services and capital goods lead to permanent credit buildup and ongoing working capital stress. So we understand that for credit, capital goods, maybe there would be some WTO limitation and they cannot do that. But definitely they should consider including GST paid on services for refund on under inverted duty structure. Another area of concern is denial of genuine input tax credit to recipient because of supplier side default or payment timelines. Provisions like 180 days reversal are widely seen as disproportionately and punitive, because it requires recipient to reverse ITC even when the tax has been duly paid to the government. Because even if that your buyer is not paying you, you cannot go and claim GST reduction. So if GST payment is not linked with the receipt of payment from the buyer, why your credit should be dependent upon that? So that is another area government should look into. Apart from that, we have seen they have come out with GST to lot of good initiatives, lot of duty structuring. But during that process, there have been some lacunas, some leakages around like credit of 2,500 crores has not been allowed to the assessees, and which is being passed on as cost to the consumer. So government should look into that and ensure that such leakages should not be there, and the intention to provide benefit to the customer should be implemented in toto. Apart from that, I would say the services and innovation industry, including IT and R&D led business, is significant to the budget. Expectation in this case would be to clear place of supply ambiguity and allow all such services to be in general case where recipient of services would be treated as place of supply.
Customs duty structures often come up as a pain point for businesses. Do you think Budget 2026 should simplify customs duty rates, and why does this matter so much?
Certainly. So I'll like to give you some example to understand the issue. So suppose somebody from US calls me up and says that, look, what is custom duty on car? Trust me, being in the practice for around more than 25 years, I will not be able to tell that. I'll have to open customs book, spend around good 30-35 minutes to just tell the rate applicable on his or her particular car, because the rate would depends on whether I am bringing in as security condition or complete build up unit, whether it is registered there, previously used, what is the length, what is engine capacity. So there are a hell lot of tariff heading just for one particular product. And the car is just an example. There are various other products on which the issue is similar. So there are various tariff rates applicable as on date. So restructure definitely is an ask for the hour. That is one. Apart from that, there are various exemption notifications. So that Finance Minister has already mentioned that gradually she will be discarding all such exemption notification and align such exemption notification along with the normal tariff. So we hope once that exemption notification, etc., would go and traffic would be aligned accordingly. And our ask is, and we hope that better sense should prevail and they should come out with tariff restructuring to ensure that complications are removed and there should be simplicity and bare minimum rate of tariff applicable on any particular product.
Thank you, Manoj. Moving on to the next question. Customs administration has increasingly shifted towards facilitation, yet legacy disputes and valuation uncertainty continue to tie up capital. Should Budget 2026 focus on clearing the past before building the future?
Definitely, Simran. And I'm not able to understand why it has not been done so far. So, if we look at GST, they have come out with the various amnesty scheme. If we look at the legacy taxation regime under central excise and service tax, they have came out with the various and lucrative amnesty scheme. Even in direct tax, they had schemes like Vivad se Vishwas scheme, and even local sales tax and VAT states have issued various incentive schemes. So not sure why they have not done so for the customs, where a lot of litigation is going on for years. And in most of the cases, to my understanding, department is on weaker footing. So if they come out with any such amnesty scheme, it is ultimately going to benefit the department, because as of now, as per the information available in the public domain, the duty of around 1.5 lakh crore is stuck in such litigation. So if government is able to get 50% of this revenue, it would be a great revenue collection from customs. Otherwise, it is going to be years before government would actually be able to collect such revenue. So definitely, they should come out with the amnesty scheme. Apart from that, digitization is the need of our big, especially for special valuation cases where everything is still at the mercy of the officer. So assessee, if they are able to upload everything online, the officer would be under pressure to dispose of cases well within the timelines. That is another thing. They can also look into make the payment system bit easier. Like in GST, payment has to be made on a monthly basis. Similar thing can be there in the customs as well, where today they have to assessee has to pay duty against each bill of entry, which is time consuming, and cost of collection is very high in such cases. It can be monthly or fortnightly at least, at least to begin with, they can start with the large importers and who have got a clean track record. They can do that. So these are certain things they can think of. They can also look at relying upon other legislations. For example, uh, if there are transfer pricing under the same ministry, like the Ministry of Finance, Department of Revenue, if a transfer pricing order has been passed or APA order has been passed, the information and order should be relied upon for special valuation cases as well. There is no need to reinvent the wheel. So these are certain points under the customs if government should think of, and we hope that some of them would definitely be part of this budget.
Thank you, Manoj, for sharing your thoughts. That takes me to the last question. Even after significant digitization, businesses still experience delays and manual interventions in customs. Do you foresee Budget 2026 making digitalization truly effective?
Certainly, Simran. As I mentioned, there are a lot of scope where digitization can benefit both the assessee as well as the department. Because for assessee, they can, if digitization is there, their efforts would be lesser in compliances, and they can use their energy somewhere else in more productive way. And even for the department, it is going to be things in the black and white. Linking would be easy, and cost of collection will come down drastically. Apart from that, it will also help them to trace who are not paying their taxes and who are genuine taxpayers.
Thank you. That was very insightful, Manoj. And thank you so much for joining us today and sharing your perspectives. We'll be back soon with more expert conversations on tax, trade, and policy. Until then, thanks for tuning in.